Mr. Padoan, your economic forecast, you say that the economic situation has deteriorated quite considerably since your last economic outlook. Where do we go from here in terms of the global economy?
Well, the global economy is decelerating significantly. We foresee a mild recession in the euro area going forward. But this is not the end of the story. We are very concerned, especially in the euro area, that contagion is rising and policy action is not adequate to deal with this new challenge. So we are concerned that things may deteriorate even further.
You say a mild recession for the Eurozone, 0.2% growth next year. What are the chances of that becoming a major recession? 1 in 2?
Well, I wouldn't put numbers, but I certainly would say that in the situation in which there is a credit event or a default event in some sovereign in the euro area, this might trigger a full-fledged recession for 2012 and 2013 with negative consequences globally. So there is a high risk. Indeed, our forecasts are tilted with risks on the downside.
I think most worryingly, perhaps for some, your report warns of the possibility of a breakup of the Eurozone. And that's the first time a major organisation has issued such a warning. Nomura now says that such a breakup now appears probable rather than possible. Is that a view you share?
Well, again, if actions are not taken, then there might be the risk that in some countries that option is considered, which would be a disaster because the costs of leaving the euro for any country would largely outstrip the benefits. And therefore, it is urgent that euro area countries take action both at the national level with appropriate reforms and at the euro area with strengthening the resources to deal the emergency now and in the longer term.
And what would the costs be to the rest of the Eurozone, those that say, for example, were to remain within the Eurozone and indeed the global economy? Would we be looking at another depression, perhaps?
Well, there would be costs in terms of a higher value of debt for those that leave the euro area, but also there would be cost to competitiveness for those who remain in the euro area vis-à-vis those who leave. So there will be negative impacts in both groups, so to speak. So it is an interest of the Europeans, but also of the global economy, that the monetary union stays together, actually, that it gets out of this current situation, which, by the way, is possible. We have also an upside scenario in our forecast.
You talk about negative consequences, you talk about costs, but those words seem quite mild given the potential consequences of a breakup of the Eurozone. I mean, just how dire would that situation be were the Eurozone to break up?
Well, we don't put numbers on that hypothesis, but the numbers we put on our downside scenario, which is a recessionary scenario, even without a breakup, are big enough already.
Okay, well, you've talked about policymakers needing to take the adequate action to turn things around. I mean, who's to blame for this situation that we now find ourselves in? Is this just Germany, for example, not wishing to back Eurozone bonds? Is this the European Central Bank not wishing to act more forcefully? Where do you see the main problem or lack of action on the part of policymakers in the euro area?
Well, I see that as a general collective action failure in the euro area to countries not agreeing on a common line of action. By the way, there is also some policy failure in the United States as well, as we have seen in the fiscal gridlock situation there.
I'll come back to the United States in just a moment, but in terms of policymakers in the Eurozone, I mean, are they up to the challenge of turning things around? I mean, so far they seem to have failed miserably.
In the euro area, what is needed immediately is action to stop contagion, and that can be done because resources are available. There should be a credible and strong commitment to avoid that bond spreads are further contaminated by contagion. Then there is the need to implement rapidly a reform of the governance structure, both in the fiscal and economic domain, and adequate resources with the FSF to deal with countries in trouble.
And specifically, what would you want to see the European Central Bank doing? Perhaps ramping up its bond purchase programme, for example, perhaps cutting interest rates further. What would you want to see the FSF doing? Can you put numbers on those?
I cannot put numbers, but I can put a target. And the target would be, as I said, to have a credible commitment to stop spreads going up again because of contagion, and therefore start from there. So in that case, you may envisage a positive scenario where markets turn their mood around, and finally policymakers are ahead of the curve and not behind the curve as they've been most of the time.
Would you favour, for example, the European Central Bank becoming lender of last resort, something the Germans seem to be opposed to right now?
Well, if there's a credible commitment to a limited support to a situation, that is what I would define as lending of last resort.
Okay. You mentioned the United States as well. We're all obviously very much focused on what's going on in the Eurozone right now. How big a threat is the debt stalemate in the United States right now? How big a threat to the global economy is that, and to the US economy for that matter?
Well, there is a threat if there is no agreement and all the tax exemptions expire, the sequestration mechanism kicks in. That would be in 2013. We estimate that if no action is taken, there would be a fiscal tightening of about 2% of GDP, which could put the US economy into a recession, and monetary policy, even in its current QE stance, would have little space to prevent that.
How worried are you by the current situation in Hungary right now? We see there bond yields, for example, they went above 10% at the end of last week, for example. Are we seeing Hungary as the next domino to fall, if you like, in the European Union?
Well, Hungary has to face problems. Of course, Hungary has a different stance, not being a member of monetary union, so that provides a different framework for adjustment, but a severe adjustment is needed in that country.
Okay, and Moody's has also come out today and said that all Euro region ratings are threatened by the debt crisis. Do you think warnings like that are going to be enough to galvanise policymakers into the action that's needed to stop this crisis from deteriorating further?
As I said, contagion is spreading. We see the crisis as a crisis of the monetary union. We would like to see quick action, resolute action, which has been lacking so far.
And just finally, it all seems pretty gloomy from what we've been discussing. Are there any bright spots, anything positive that we can take away from your economic outlook that's out today?
Yes, the final part is exactly on the bright spot, because we believe that if policy action is taken, confidence can be boosted significantly, and we could turn things around with much more growth than we forecast in our central scenario. And this requires actions at the country level. Many countries are already doing this, but also action at the euro area level, which, as I said, could turn things from a downside to an upside, and we could finally be out of the woods.